But ultimately, what it led to was it changed my life. And I'll tell you how, okay? So I've tried every strategy there is that you can think of. The reason we stick to the strategy is because it works best for us. So in a nutshell, what we do here at Theta, okay, is we agree to buy stocks that we want to buy anyways at a discount. So now what I did over the years is while I was working, I took all of these premiums, and I'm going to show you how I generated, okay? And I didn't spend any extra money. I didn't adjust my lifestyle. I took all that money and I kept buying real estate until I had enough real estate where I didn't have to work again. And I'm not saying this to brag at all. I'm just saying how lucky and fortunate I'm in the position I'm in because of where I started out. Now, anyone can put themselves in this position. The key is learning always is the key, right? So here, let's go through a first trade, okay? So here's Apple, okay? Right here at the top, Apple. Now, the first thing we always do here at Theta is we look at companies that we want to own for the long term, companies that we believe will be worth more in the future than they are today. So that's the first thing we do. We do our homework, all right? Once that homework is done, then it's not a big deal, right? If we have to own the stock, okay? So I'm going to take a look at the chart here on Apple, and there's a bunch of squiggly lines. Don't worry what they all mean. We have our Theta trading course covers what all these things mean. All right, so I'm looking at this, and I'm pretty happy to buy Apple for 160, okay? So here is how it works. As you can see in the top left-hand corner, Apple is trading for $164.12, okay? Now, obviously, everyone here has heard of Apple, right? I would be shocked if you haven't heard of Apple. Most people have. All right. So now that you've heard of Apple, you have two choices if you think it's going to be worth more in the future. If you think Apple's going to be worth more in the future, you can do one thing. You can either buy Apple at $164.19 today, or what you could do is you can guarantee a buy price of Apple at a lower price and get paid for that, okay? Which is what I'm going to do, okay? So I'm going to go here to September 16th, okay, which is about a month and a half away, a little bit less than a month and a half away, okay? And I'm going to guarantee a buy price of Apple at 160. Now, the reason I don't mind guaranteeing this buy price is because I would have bought Apple anyways for $164.19. But what I'm doing here is I'm selling the system. I'm saying, you know what, no matter what price Apple goes to, I'm going to take it off your hands for $160, which is $4 less than it's currently trading for. But check this out. I am being paid $4.15 a share just to agree or guarantee a buy price on Apple for 160, okay? So I'm going to go ahead and do this trade, and I'm going to give you another analogy as to how that works, okay? Think about it this way. Let's say you have a real estate agent. They say, you know what, I'm going to guarantee the buy price of your house. Now, if you list with me, I'm going to guarantee that price. Okay, great. But you're not going to pay that agent on top of that for guaranteeing a buy price, right? Like if the agent says, you know what, I'll guarantee I'll buy your house is worth $500,000. I will guarantee I will buy your house for no less than $490,000. Okay, great. Well, they got paid for that. So in this instance, what we did here, okay, is we guaranteed a buy price of Apple, okay, at $160 on or before November 16th. And you can see here, I decided to buy 200 shares of Apple, and for that, I got paid $810 US. So even if Apple goes below 160, I still have to buy it for 160, even if it goes to 155. But remember, I got paid $4.10 a share. So I'm really buying it for about $156. So I'm getting a pretty decent discount here. Now, let me ask you a question. Would you rather buy Apple for its current price, or would you rather get paid for it, right? Simple question. No, for me, I'd rather get paid for it, right? Very simple concept. I'd rather get paid to buy Apple because I would have bought it anyways. Now, if Apple goes below 160 here, I'll have to buy it. But I keep that $4.10 a share. If Apple doesn't go below 160, well, guess what? I don't have to buy it. And I still keep that $4.10 a share. So for me, it's a win-win situation every single time. And this is every single thing that we do here at Theta revolves around this one strategy, okay? So now let's go to another stock that we like a lot here. Let's go to advanced micro devices. Some people may know what this is, some people do not. It is the chips that go into a lot of the stuff that we make, okay? Stuff that we use, right? Like electric cars and computers and TVs. So advanced micro devices, okay? Again, we do our homework, and that is the first and foremost thing we do. We look at the stock and we say, okay, it's worth $102.57 right now, but in the future, we think it'll be worth even more. That is the first step, and we'll show you how to do that homework, okay? So now I'm going to take a look at the chart and say, okay, well, what price would I like to guarantee this buy price at? Okay, well, I would not mind. I'm going to go for either 95 or 90, depending upon what the payout is. So I'm going to have to hit the options button here at the top, okay? And I'm going to take a look at 95 or even 90. So I'm going to give myself a substantial discount here, okay? So it looks like the 90s are paying, as you can see here. Now it's trading for $102.56. I'm just guaranteeing to buy it for 90, which is $12.50 below its current price. I'm being paid about 2.5% for a month and a half just to do that. Now, if I decide to do the 95s, right, the closer you get to the actual price, the more likelihood that you will have to buy it. Therefore, the greater the payout, okay? That's one factor. Another one is called volatility, but that's a different story altogether. So I'm going to buy it for 190 or 195. In this situation, since the markets are still a bit wonky and I'm still a bit nervous about the markets going into September, I'm going to agree to buy it for $90 a share, okay? Which again is a $12 discount, huge discount, okay? So I'm going to hit the sell button here, okay? And again, I'm going to agree to buy 200 shares of AMD. And there it is. I'm going to do contract quantity 2. Each quantity represents 100 shares. So I'm agreeing to buy 200 shares, okay? And there we go. I'm going to go ahead and do this trade. And there it is, order filled. Fantastic. So now I have agreed to buy 200 shares of Apple, and I've agreed to buy 200 shares of AMD today. So let's take a look at my AMD. AMD, I got paid $2.08 per share. So on 2 contracts, I got paid about $416 US. All for doing what? For agreeing to buy a stock that I love. And again, that's not meant to be stock advice. You have to do this. You have to understand which stocks you like. I'm getting paid a lot of money just to agree to buy something that I would have bought anyways for a substantial discount. To me, that is a phenomenal place to be, okay? Now, let's take a look at Microsoft here, okay? So that's the next stock we're going to do. Now, you might ask, well, what happens if I had to buy Microsoft? Can I do anything then? Well, absolutely you can, all right? So here, I'm going to show you my average buy price on Apple here. Under position, you can see here, my average price on Microsoft here is $243.91, okay? And currently, Microsoft's at $280.45. So it's a fair bit above where I bought it for. And then I say to myself, you know what? I wouldn't mind getting rid of some of my shares, okay? And I wouldn't mind getting rid of them at about $295, okay? So I'm going to get rid of a couple of my shares at $295. So not only do we get paid when we agree to buy our shares or guarantee a buy price, we also get paid again if we guarantee to sell our shares for a certain price, okay? So here, I'm going to go to, again, September 16th, which is about a month and a half. There's a reason I'm picking about a month and a half away, a very specific reason. And that reason is simply because it is the most efficient way to do it. And we'll get into that if you ever decide to join us here at Theta. So here it is. I'm going to agree to sell, okay, my Microsoft shares for a price of $295, okay? So I'm going to agree to sell them for $295. All right, great. So I'm going to hit the sell button here. I'm going to agree to sell 100 shares, okay? And I'm going to do a market order. That doesn't really matter in this situation because this is a sample account, there's a play account, and there it is done. So what happened here is Microsoft is trading for 280, okay? And I have said, you know what? If it goes above $295 between now and September 16th, I'm willing to forego the upward movement beyond $295. But in return for that, I was compensated, as you can see here, $3.50 a share. So I gave up anything beyond $295, but it's only till September 16th. It's not that long. So Microsoft would have to appreciate a decent amount for this to be called away, which means I would have to lose the stock. I would lose the stock for $295, but I would also keep the $3.50. And if it doesn't go to $295 a share, well, guess what? I still keep that $3.50 and I can do it again next month and so on and so forth. Why this is such a game-changing strategy is because if you understand how to do this, how to make money on your phone using, the money that you already have, agreeing to buy stocks that you would be buying anyways. Think of what the future could hold for you in terms of, you want to retire one day and you just want to invest. This is a fantastic way to generate money while you're sleeping, right? You're agreeing to buy and sell shares in companies that you want to. And as long as you're not margining yourself, the worst thing that will happen to you is that you will own shares in the companies that you are agreeing to buy, okay? Now, let's say, for example, you're like, you know what? I don't want to do individual homework on companies. I don't want to, look at what each company's worth. Well, there are indexes, okay? That is like, for example, this is an index. And again, I'm not giving you stock advice here. I'm just showing you what an index looks like. This is the top 100 stocks on the NASDAQ, which is a tech-heavy index, okay? And you say to yourself, you know what? I don't want to buy individual companies. I'd rather just buy this whole sector, okay? Well, you can do that as well, okay? So again, here, NASDAQ is trading at, triple Qs are trading at 320, and I say to myself, you know what? I wouldn't mind picking some up here at let's call it 300 and, I would go 310, maybe even 315. Let's see what the 310s or 315s pay. So it's at 319 right now. We might even go down a little bit further because, September is not the best month for the stock market. So we might go down even a little bit further than that, okay? So looks like the 310s are paying pretty well. So we're going to go ahead and do these 310s here. So what am I doing here, guys? I'm agreeing to buy something that is trading for 320 right now. I'm agreeing to buy it for 310. I'm guaranteeing a buy price. But the reason I don't mind guaranteeing that buy price is because I actually want to own it, okay? So again, I'm going to go ahead and do this trade here. And I'm going to hit the sell button. I'm going to do one market order. And there we go. And there we go. The trade is done. Order filled. Okay. All right. And I'm going to go back out and show you how much I got paid on that trade. So you can see the QQQ. I got paid $738. Okay. And what's the worst that's going to happen to me? I'm going to own something that I wanted to own $10 less than it's currently trading at. That's the worst that's going to happen to me. And then I can agree to sell it for a profit if I want to as well. Now, sometimes the markets goes through corrections. The reason we do it the way we do is because we always want to leave ourselves in a worst case scenario where we own high quality stocks, okay? I'll give you an example here. Here is the S&P 500. And to show you that the odds are heavily in your favor, okay? The stock market goes up over time. So if I go to a 5-year chart here, you can see here, even though we're going through a major correction right now, you can see 5 years ago, the S&P was at 244, and today it's at 411. So on average, in the last 50 years, the stock market has gone up about 11% a year. So we always want to leave ourselves in a worst case situation where we own a high quality stock in a company that we understand thoroughly. So that if a market correction does happen, and they will, that we can wait it out. Our first goal is not to lose our money. Now, you're not always going to get everything right, but because you can see, this is a fantastic way to make money long-term, okay? Oh, let me go down here, okay. So we did the QQQ trade. Now we're going to do one more trade. We're going to do here, we're going to do a couple of trades. We'll do a Tesla trade, okay? This is some stocks pay more than others because of something called volatility. There's a book in the back, as you guys can see over there. Volatility is a subject matter unto itself, okay? So as you can see, Tesla's trading here for $875 a share. And again, we've done our homework on Tesla. We think it'll be worth a lot more in the future. So we certainly don't mind buying it for less than it's currently trading for. So again, we're going to take a look at our chart and see where should we look at buying Tesla. And Tesla, by the way, announced this morning that they're going to be doing a 3-for-1 stock split. So this price will be closer to $300 a share soon. I'd be comfortable buying this at $800, okay? And that's a fair bit away from where it is right now. So it's 877 right now, and I'm saying to myself, you know what? I'd be happy to buy this for $800 even, okay? And that's a substantial discount, okay? So I'm guaranteeing a buy price of $800. And that is paying me $34 a share, okay? Roughly. Now, $34 a share divided by 800 is about a 4% return, okay? 4% return is substantial. And all I'm doing is agreeing to buy Tesla for $77 below its current price, okay? All right, so I'm going to go ahead and enter this trade. And there we go. Order filled. Fantastic. Okay. So as you can see, I've made a lot of money today. And the only thing I've done is agree to buy stocks in companies that I would have bought anyways, okay? Magdalene has a question. How are you doing, Magdalene? Hope you're doing well. Hi, Omar. If I were to sell two put options for the same strike price, but two different expiration dates, i.e. one expires in 2 weeks, then expires in 4 days. In terms of theta decay, 4 weeks is better, correct? No. Actually, the closer it gets to the expiration, the faster it decays. So it's not necessarily what's better or not. It just means the decay becomes faster and faster closer to expiration. So you would get more decay in 2 weeks than you would in 4 weeks. However, if in 4 weeks you would get a greater discount because more time would give you more, you'd be able to get a bigger discount. Can you please explain how theta columns and IBK work in terms of premiums collected? In other words, how do I read the theta numbers? If you can elaborate on that. So as you can see here at the top, it says theta. It says, so this overall portfolio is losing about $427 in theta. And since we sell options, this is how much we are making. It's like fishing with dynamite, okay? The minute we sell an option, it becomes worth less and less and less simply because of the passage of time, okay? I know it's a difficult concept to understand, but let's take, for example, the trade we did here on Apple, okay? Today, it expires on September 16th. Let's say Apple price doesn't change the next 2 weeks. Well, now there's not 6 weeks left before it. It's only 4 weeks left. So the value becomes worth less and less. So this is a heavy, heavy advantage to us. We sell an option and it becomes worth less and less and less and less. Simply because of the passage of time. That concept is known as theta. That's why we called our company Theta Trading, is because we make money simply because time passes. And that is a really good spot to be in, okay? So is that what you were asking, Magdalene? I hope so. If not, please let me know. I'm happy to elaborate. And then let's go to something else for all of us Canadians out there who know TD Bank, okay? So you can do this on any company that you really want to, okay? But the key is, as always, making sure that you want to own shares in that company, okay? That you are very comfortable owning shares in that company, okay? So TD is trading for $82.79, and I can say to myself, you know what? I don't mind buying some TD. How about I pick up some TD at $80 a share? Okay, great. Well, $80 a share, it looks like I'm being paid $1.16. Now, the reason TD does not pay as much money is because it doesn't have as much volatility, meaning it doesn't move up and down as much. But look at this. You're still being paid quite nicely. You're being paid $1, it looks like about $1.16 a share, which is about 1.5% for 1.5 months, simply to agree to buy TD for almost a $3 discount. To me, that is a great deal if I am looking to buy TD. And I'm going to go ahead and do this trade. Okay, and bam, trade done. Okay, order filled. And I've now agreed to guarantee a buy price on TD at $80 a share. And that is all we do here each and every day, guys. We guarantee a buy price on companies that we want to own. And the worst case situation is that we wind up owning those companies. That's it. And as you can see, even if we own those companies, we can agree to sell them for a profit and get paid more. It's a very forgiving strategy. But the basis behind everything is you must have patience and you must have discipline and you must have knowledge. So the patience is if the markets go down and they do, like for example, this year, it's been the worst start since 1970. But I'm almost back to, I'm not that far off of where I was now. Still a fair bit down from start of the year, but I'm not that far off. Why? Because I was able to hold. The last few years, we made a killing. The second thing, knowledge. Understanding what you're doing and why you're doing it, when you're doing it. And the last thing is understanding the companies that you invest in. Discipline. Never invest in companies that you don't believe in, that somebody told you about. You invest in the companies that you believe in, the ones that you use, the ones that you think are going to be worth more in the future. As you can see, we covered a few of them here today: Apple, AMD, Microsoft, TD Bank, Tesla. Now, these are companies that we've done homework on that we think will be worth more in the future. And that is the purpose of this, okay? So I've done a few trades here, guys. Is there any questions anyone has? I'd love to answer any questions. If you guys have any questions, let me know now. What else would you like to see? Manib, otherwise I'll turn it over to you, my friend.
Thank you, Omar. So for the people that we have on, feel free to ask a question. We'll give it just a minute. Otherwise, I'd like to show you guys something. For those of you that are interested in learning more about what we do, why we do it, you can always visit our YouTube channel. So Omar, let me know when you can see my screen here. If you guys just search up Theta Trading Co.
Yeah, I already put the link there.
Yep, so you guys can go check it out. We have tons of videos here. Otherwise, you can head to our website, click Theta Trading Introductory Course. You can click register now and read about all the different ways and all the different items that you guys get when you do sign up. We're pretty straightforward here. It's $22.49, or you can break it up into 3 payments. Aside from that, thank you for joining. And then Magdalena actually had a question, Omar. She said, I was actually referring to a specific trade. For instance, I sold a put on AMD at 90 September 16th. Theta is now negative 5.6 cents, and I'm at an unrealized profit 12%. How do I read that Theta number?
Oh, okay. So that means okay, so that means the negative 0.56, that means AMD, that put that you wrote, is decaying at 5.6%, 5.6 cents per day. So it's worth 5.6 cents less today. Tomorrow it'll be worth a little bit less and a little bit less and a little bit less. So that means today it is worth 5.6 cents less. That is the rate of decay for that particular day. And then secondly, the unrealized profit of 12% is because since you have written that put, AMD has gone down more than the decay has happened. So you're at an unrealized profit of 12%. But that doesn't mean much anything. Only thing that you have to worry about is that you're agreeing to buy AMD for $90 by here between now and September 16th. But that's the rate of decay, okay? You got it. Thank you. All right, fantastic.
Hi, Omar. I think that's it. Thank you, everybody, for joining. I'm going to drop our website link in the chat below. Feel free to check it out. You can go to our website, book a call with me if you have any questions. And Omar, I'll just toss it over to you for last comments.
Yeah, guys, this knowledge absolutely changed my life. I hope you guys take advantage of it. Book a call with Manib and get to learn what our community is about. Look at our reviews. It's absolute life-changing information, life-changing knowledge. And for those of you who will be joining us, we'll look forward to teaching you. Otherwise, the rest of you guys, have a great weekend. We'll talk soon. See you guys. Have a good weekend.